have a lot to talk about. I'm Lynette Zang, founder and CEO of Zang Enterprises. I'm sure all you guys know or are aware that Fed Chair Powell dropped interest rates by 50 basis points last week. So there, we have our answer. What's he going to do? 25, 50, whatever. So here's what they write in the New York Times. Big Fed rate cut shows optimism, turning from inflation to protecting jobs. I got news for you. Let's take a look at what the Magic 8 Ball says. Oh yeah. Outlook, not so good. Yeah, think? Let me show you why the outlook on inflation, on job creation, does not look so good. And I hope I'm going to open your eyes, because I think that what I'm about to no, I don't think. I 100% know that the pattern shift that I am about to show you is critical for you to see and make sure that you are getting prepared, because the biggest challenge is timing. But will the Fed's emergency 50 basis point rate cuts in September cement a soft landing for the economy, something that has never happened? And this is by my friend, and by the way, you don't want to miss this interview. It's going out on Saturday with Michael Pinto. It was a great interview. We're talking about this even more deeply and the bond market, so don't miss it. But here are some fun facts he writes. The government has laid out $1.049 trillion on debt service, up 30% from the same period last year. Well, what's debt service? That's interest on the debt, except that they're not actually paying all of the interest. So the interest is going into the principal and compounding. If you were doing that with your credit cards, are you ever getting out of debt? No. So we're up to over $1 trillion on debt service year over year, up 30%. The budget deficit for this fiscal year is $2 trillion, up 24% from the year prior. The budget deficit for just the month of August last year was actually a surplus of $89.2 billion. Wow. Do you want to know what the federal deficit for August is this year? Well, it was a staggering $380 billion. So we went from an $89.2 billion surplus to a $380 billion deficit in 1 month. Oh yeah. Fed rate cut shows optimism. Garbage. Absolutely garbage. Their job is to lie and lie and lie some more. So this is really why. I'm going to show you why they really cut it and why they cut it so steeply. He says the real reason why the Fed cut rates by 50 basis points was to help out the Treasury with its soaring debt service payments. And how about all those corporate bonds, that debt wall that is rolling over now to these corporations that can't afford all of this interest anyway, let alone. So what the Fed is really trying to do in here is engineer that soft landing. Will it happen? Well, time is going to tell, but in my very, very well-educated opinion and looking at what's going on, and I'm going to show you more in just a second, do not click off of this. You need to see every single slide in this presentation. And by the way, put your comments below. We need to have this conversation, and it needs to be loud. Okay, so let's take a look, because gold price rally just getting started as investors digest the Fed's new easing cycle. But let me tell you, there are things that are happening that have never happened before. That's not optimism. That's fear. Gold's reaction to the Federal Reserve's 50 basis point cut and its signal for 200 basis points of easing over the next 2 years, right? So what does that take us down? That's 250 basis points, which takes us down to roughly about 2.5%. They are dropping those interest rates as fast as they can. Powell said the central bank is not in a hurry to ease interest rates and noted that the Fed is now in the process of recalibrating its monetary policy because yikes. Let me show you what I mean by yikes, recalibrating. I mean, I love the Fed speak. What does that mean exactly? That means they have to change because they see a crisis in the works. Fed officials growing concern about the job market. So they're going to say, it's all about the children. It's all about the jobs. But quite frankly, you cannot turn a ship in a thimble of water. So this 50 basis point cut means absolutely zero zip zilch to the job market. But what do we see going on here? Concerned about the job market? Actually, in inflation risks. Pivot to rate cuts also reflects diminished concerns about inflation risks. That's also garbage because they know that dropping those interest rates, remember, the key tool that central banks have to regulate the rate and speed of inflation are interest rates. So when they want to slow the economy, they raise the interest rates and fewer entities or people typically borrow and spend. That hasn't been the case this time. But when they want to create inflation, they lower the interest rates so that more entities will borrow and spend. And I want you also to think about this because what we were just talking about is over the next year or so, them cutting, it'll be faster than that. I'm ready to put my technical neck on the line. This is going to be a couple years. This is garbage, right? This is going to happen very, very quickly and very, very soon because we are in crisis mode regardless of what they say. But here is what they say. We know that reducing policy restraint, which I'm going to show you their policy restraint, bear with me, could hinder progress on inflation. In other words, there's only one way to fight deflation, and that is with inflation. And that's where they're going. They're telling you, we want more inflation. And what does that really mean? That means that they're telling you that this dollar is overvalued and they're taking it down. That's what that means. That's what that means. At the same time, reducing restraint too slowly could unduly weaken economic unemployment. Really, they need more inflation, and I'm about to show you why. Because they feel that it's so much easier to deal with inflation than with deflation. Deflation is death to the central banks. Right? And remember, only one way to fight deflation. Let me show you what that deflation is. Because what you're looking at here is the M2 money supply. This is the inflation machine. Now, mind you, they took the M3, which is the total money supply, away from us in 2006. What do we need to know that for? But basically, look at this. Because every single time we hit a rough patch, as you know, we grow more debt. And when we grow debt, we create money. That's what happens when we grow debt. So we got the M2 supply up to almost $22 trillion. And then look at this little teeny dipperooski. All it fell to was 20.7, but that was enough to hurt the economy. So it's starting from a very, very high level because I hope you can see that the rate and speed that they're creating money increases faster and faster, and they need more and more of it, and they're getting less and less result. But their concern is right here in this little blip up. So they've started this money printing machine all over again. And now we're up to just a little bit less than we were at the peak, 20.054 trillion in money supply. So when they create this money, it has to go someplace. So where does it go? It goes into stocks And what do we see? Stock markets at all-time highs. But the value of what's out there every time they do this is less and less and less. That decline is deflationary. Only one way, not two ways, not three ways, one way to fight deflation is with inflation. And that's what the Fed just announced. Not because they're optimistic, everything is hunky-dory. No, because they are scared that they have lost control. And we're going to wait and see, because after this announcement, rates went up. Could it be that the bond market is recognizing the insolvency of the Federal Reserve? Does that mean that they'll stop paying their debt? No, all they'll do is print the dollar into oblivion so that they repay the debt with dollars that have zero value, right? This is exactly the same strategy that we are executing for your fixed rate debt at Zang Enterprises. Because I always think you should do what the smartest guys on any given topic are doing for themselves. And we know what central banks are doing. They're buying more gold than they ever have in history. The M2 rose by $29.3 billion from the previous month, okay, to that 21.054 in July of 2024. That is the highest in 17 months. So this transition back to more inflation was underway before this announcement, but this is going to supercharge it. And much as they want you to think that inflation is under control and that genie is back in the bottle, no. Their behavior is showing that they want more inflation. They are telling you this is overvalued and we're gonna pull more purchasing power, wealth out of it. Because it doesn't matter how many of these you have. I mean, I'm a trillionaire with a Zimbabwe dollar that buys me zero. I don't want you to be in that position. And frankly, I'm showing you the dollar, but this is happening all over the place. Because what we now have is the absolutely probably one of the most critical pattern shifts that we have ever had. And what it tells me is that we are falling into a hyperinflationary event. And let me show you why. This is the Financial Conditions Index. I went back and I looked at a whole bunch of their Fed graphs, and I have to tell you that this is the first time historically when the Fed has done this level of easing into an already easy market. This is zero, right? So anything above this line are harder financial conditions. And remember, these gray lines, these gray bars, are official recessions. So when they ease, it's because we're in a recession. But now look at, we are pretty darn close to the easiest financial conditions ever. Because that's what this is really about. Transfer of wealth. By devaluing this and giving as much of this as they can to corporations and banks. And then what do banks do? They leverage that. So they make huge derivative bets that nobody even knows the true value at risk. But they are easing into an already easy condition. Because all that money that they've created since 2008, as I just showed you on the M2 chart, it didn't go away. And you know what? I want to point one more thing out while we're here. You've never, going back to 1960, as we were making the transition into the new debt-based system, have you seen a pullback in the M2 supply like the one that we had? No, you have not. So that is huge. And their counter to that huge pattern shift is another critical pattern shift where they are dropping rates into already easy money conditions. This, my friends, is hyperinflationary. only one way to fight that deflation. Those stock markets have to continue to go up. The real estate markets have to continue to go up. The bond markets have to continue to go up. These lies that hide the truth from you because you don't understand inflation. And by the way, they make things really complicated because they don't want you to understand it. But I'm telling you, this is a huge, 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 big deal. This is the first time that the Fed has ever eased into these financial conditions. Why don't you tell me in the comments what you think about that? Or if you have questions about that, because this is so important that you understand it. I hope we talk more about it when we're doing the live questions. I want to make sure that you understand this. And at any time, if I'm not explaining it in a way that you understand it, that's not your fault. It's my job to explain it in a way that you get it. So you let me know, and even if I explain it and you still don't get it, that's not on you, that's on me. Let me know and give me an opportunity to try and explain it another way, because this is the biggest warning that I can possibly give you. This is your warning. You better take heed. And if you haven't done it yet, you need to call. Give us a call so that we can set up your strategy and get it executed ASAP. 833-GLDZANG. But give us a call and make this happen, because the markets are hailing all of this inflation money. Woohoo! Happy days are here again. And the stock market, I mean, look at this. Here's 2008 when the QE money printing started. Well, that money has to go someplace. Is it the stocks being that much more valuable, or how much inflation are you willing to accept? Because we're virtually at the end of the purchasing power of this stuff. Officially, there's 3 cents left and dropping more. And that's what this 50 basis points is all about, is making you lose that reinvigorating inflation and making that purchasing power drop even more. What? So the stock market goes up? That hides how much trouble we're in? Because quite frankly, that's called a melt up. 2020, they printed more money than they did back in 2008. Did that money just evaporate? But yet still, it's not enough liquidity. Why? Because we are at the end of this currency's life cycle. And the sooner you realize that and accept it and get into sound money, gold and silver, I'm telling you, if we do not have a seat at the table, if we can't get a very vocal 3% globally to position into physical gold and silver, what they have in mind for us, we're not going to like it. We're not going to like it at all. But stocks hit record high a day after the Fed's big interest rate cuts, because they can now borrow, leverage more money and push stocks up. So you're thinking, isn't this great? You open up your 401k or your IRA or your brokerage account and go, oh, look at this, stocks are up. That must be, everything must be okay. No, because the more of this money printing they do, the less value what's already out there has, until it goes to zero. And yes, I do believe that we will see ZIRP again, zero interest rate policy, because all they have left is inflation. And the only difference between inflation and hyperinflation is the speed of that inflation. That's the only difference. And so what we're seeing in the markets are a melt up. Now look, this is a very typical pattern that we see going into a high and then hyperinflationary event. So you need to understand this so that when you look at what's happening, you are not fooled, because they need you to stay in these fiat money products, because guess how much easier it is to steal your wealth from you? I say no. I say let's take our power and our control back, and we can do it in community. We can do it in local community to make sure that you have security in food, water, energy, security itself, barterability, wealth preservation, community, and shelter. There is power when we come together. Locally to make sure that you have security in all of those areas, and globally to make sure that we have monetary security, that what we work for isn't eaten up by the inflation that they've created. I really can't stand these people. I really can't. And they've got to be sociopaths. And they are. And I'm not saying that because I'm trying to be a little snitty. I'm saying that because they cannot care about how their behavior and their choices impact you. That's why I'm saying stretched valuations, stocks and bonds combined have rarely offered such low yields versus inflation. Duh. Because what drove the prices on all of this is inflation. And so that gap has gotten real narrow. And you haven't for a long time. You have not been getting paid to take the level of risk that you are taking. And you are not able to maintain the pace above inflation. Are stocks and bonds worth more? Or is this worth less and less and less? That's the truth. That's absolutely the truth. But here's another chart. There's two more charts that I really want you to pay attention to because, they may say purchasing power, but this is since 2008 with all that money printing. And mind you, we've already lost at this point over 97% of our purchasing power. But look at how much more rapidly that has fallen since 2020, because of all that money printing. It inflates fiat money assets, but it devalues the currency that you and I work for and we have to use as our tool of barter. Gee, why don't people understand that inflation genie is back in the bottle? 'Cause it's not. And it's about to come out to you in spades. And this is the spot gold market, which is a suppressed market, and how much that's gone up during that same time period. Even though they use the paper contracts to create so much more gold and silver, same thing, so much more silver than actually exists in this physical world. But they can make it look like it until they can't. And we've talked about the breakouts, et cetera, et cetera. But, even 2,600, 27, 3,000, what have you, take your pick. None of that really shows you the true fundamental value of just one little ounce of gold for its primary function. So even in these manipulated markets, as I've shown you many times, gold and silver maintain your ability to purchase, and even with gold, then some. But this is what they reset the currency against, because gold is the primary currency metal. Silver is the secondary currency metal. Either way, and whatever it is that you do, you better be holding it, because that is the only thing that is truly outside of the markets and invisible to those that are in power. Take your power back. Be your own central bank. That's the way. That's the only way that you can really protect yourself. Also, coming together in local community. Look, go to a farmer's market. Volunteer. Find out who's growing your food, who's creating your food. Give them a day of your labor. I guarantee you at a farm, there's always work to be done. But if somebody is going to have to choose between somebody they know that has given them a day's worth of labor and somebody they don't know, if they have to choose who's going to get the food, guess who's going to get it? you be the one to get it. We've got to come back into community. We've got to help and support each other on a local basis and then on a global basis. Because if we don't have a seat at the table, and what that means is having a say in the new monetary system, if we don't come together and buy physical gold and silver, we're not going to have that say. It's that simple. And how's this working for you so far? The new system, the CBDC, the full surveillance system? Well, didn't Canada show it? You don't like what we say? Boom. Australia's got a new law that just came out, and I'm going to talk more about that next week. They're going to create an environment where you censor yourself, and they've already done that, quite honestly, where you censor yourself, you're not talking to each other, you're not coming together in community. It's divide and conquer. I say, let's come together and win. So until next we meet, please be safe out there. Bye-bye.